Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland. Visit c21win.com.au for your chance to win.
Welcome back to Your Property Empire. Well, joining me on the show tonight is Joe Kelly, Chief Marketing Officer at Ubank, and we've just been joined by Charles Tarbey, Chairman and owner of Century 21 Australasia, and he's given me my Christmas present early. Thanks for the jacket, Charles. You've got perfect taste.
Yeah.
So do you want to explain this one?
It's a wonderful cause, and you've done this for me each year. You've worn the...
Mate, I do what I can for you.
I know you do. We do what we can to raise money for the Cancer Council in October right across Australasia. Everybody changes their colours, and gold jacket and new uniforms are replaced with pink around the countryside. Offices change to pink, signs, websites, everything. There's lots of golf tournaments, morning teas, God knows whatever else going on. The guys in Adelaide held an auction just for some bits and pieces the other night at one of the training nights. They raised $9,881 just at that event that evening, and so these things are happening all around the countryside. You know,
so it's perfect to go with your video.
We tried to raise a couple $100,000.
Yes.
I saw your video, yes.
Yeah.
We tried to raise a couple $100,000 for that cause, and as best as we can. We don't always get there, but we certainly do our best.
Fantastic.
In the short space of time.
Good stuff. I'm sure this will be perfect with my purple car, Charles.
It's going to be socially media marketed heavily.
Exactly.
Yes.
Well, to jump on to some property stuff, QBE had a housing report, and it was talking about house prices are set to flatline while unit prices are set to dip.
That's
Do you
interesting.
believe that?
Well, it's interesting that QBE would commission
Well, I think it's QBE LMI probably.
Right, OK. Yeah, I see that happening already, not in all parts. As you know, some parts are still experiencing very, very high clearance rates, and those are the areas where there's limited stock available. But it's more than flatlined in some areas. It's gone below that in some areas. And I think that, and I'm talking about housing now, housing hasn't flatlined, in some areas it's crashed. But overall, I see the market as levelling out. Unit prices stabilising because they went much higher than they normally do. The distance between an apartment and a house has gotten closer and closer over the years because people have favoured apartment living. But I think, again, the abundance of apartments coming on in the marketplace, that's probably going to bring that distance back to where it used to be.
Now, Joe, obviously you guys are doing a lot of research, and I think that demand is really being led by, obviously, New South Wales and Victoria. So I guess the whole dilemma is as well, how, with house prices that high, how can they keep leading all the time?
Well, there's a shortage of supply too in those markets. So, and you know, I think there's a lot of demand because the cash rate is so low. Banks can offer really attractive interest rates, and people are just going for it. But it's, you know, the market is getting a little bit tighter.
So do you see it peaking? Because obviously a lot of the, I guess the people that are negative on the market say that the housing market's peaked. But from a bank's perspective, do you see that?
I think there's so many factors that contribute to that. It's really hard to be definitive about whether there's a peak or not. It is a bit of a roller coaster. There's less investors in the market, less properties in Victoria and Sydney, and you know, I think that there's too many factors to determine. But you could say that it looks that way.
Now, Charles, I was speaking at the Property Expo Friday, Saturday, Sunday, and talking about or trying to teach people how parents can use their equity to help the kids, and obviously for the kids how to, but to do it as a business thing rather than asking for a handout, how to get guarantees, things like that. Do you think that's a good move, or is that going down a dangerous path?
Yeah, I think we've covered this over a period of years. We talk about the fact, firstly, banks are a bit hesitant to lend in that area nowadays because of what happened a few years back where some parents lost their home because of bad decisions on the part of their children. So that they're more cautious in that area. And I think that when you start getting to a point of having guarantees and contracts between family members, it can get really nasty.
But the situation,
what's your stance on that?
Well, the situation has changed because 6 years ago you only had 1% of kind of family support with property buying, and now that's gone up to 20% contributing towards deposit and another 13% helping with repayments. But Monash University's recently done some research where it indicates that children or recipients of parental support still know that they need to take ownership of that property dream. And so people just need to, there's pros and cons, because if parents suddenly can't contribute anymore, the children need to be able to understand that they've got to meet their repayments no matter how much they are, and also have a buffer if the rate rises.
There are definitely pros and cons with it.
Yeah.
I mean, I guess some people are in a position where they can help their children without having to sign guarantees or contracts and just give them a gift. I think that's the easiest way. So, mind you, the children are always reminded of that gift that they received. But it is a dangerous area, because you see it in family members when they get together to buy investment properties, and their circumstances change. So each particular individual's got something going on in their life and they need the money. So now, how do we get that money out? How do we liquidate the asset quickly without impacting on people's lives? And that becomes part of the problem too.
Now, while I've got a lender on the show, I might ask you about a different concept that we heard about, is flat pack houses, where you can literally build it with a hammer and a nail and a screwdriver. Are you confident lending on those type of properties?
I'm not sure we've seen that come to fruition yet, but I think there will definitely be a movement towards that. I mean, if you look at what's happened in the US over the last 5 years, and there's been a huge growth in the small home movement, and I think this just gives people another option. And again, it's another option in terms of reframing the Australian property dream and saying it's not for everyone, but it's something that people might start to consider. You can still own your own small property for $65,000. You just need a piece of land to put it on.
And in Queensland, they literally pick up a house and move it and put it somewhere else. So why not?
That used to happen all the time. There's a company that did that for a living, just move old houses and rebuild. But I think this is a good opportunity for a bank that wants to get into a marketplace and springboard into a bigger marketplace, because it's opportunities like that give smaller businesses that are starting out. For instance, if I go back to a small business called Macquarie Bank many years ago, they funded real estate agents based on cash flow. No bank wanted to do that. And today in the real estate industry, Macquarie Bank is the most dominant business when it comes to collecting fees and interest charges and holding sinking funds and whatever else associated with the industry, which is quite significant.
And I think banks have to be open to changing trends. If we go right back to the beginning of the program, where we're living the same dream but in a completely different world, we have to evolve as much as our customers do.
Exactly.
Yeah.
And Charles, let's jump into the numbers. What's happening with the clearance rates?
Well, they're going against all of the trends that people are expecting. This time last year, the clearance rates were only 66.6% nationally. Really quite extraordinary when you think that last weekend they were 80.2% nationally. And this is a few weeks in a row where we're actually higher, 10, 15, 20 points than over this time last year when we were expecting a change in the marketplace. Sydney was the best performer again. It came in at a respectable 85.6%, and Melbourne came in at 81.8%. Adelaide and Canberra were in the 70s, in the mid-70s. And Brisbane has had a really good steady movement in the mid-50s for a few weeks, which is very, very good for Brisbane. So overall, the clearance rates they're still very solid.
Getting up there. What about homes advertised for sale?
And that's part of the problem. It's just not happening. We had an increase over this time last week of 0.01%. New Zealand had a better track record than us at a plus 2.2%. Last week they had 15.2% climb over the week before. So they're having a great movement of stock. I was speaking to the guys in Wellington office, Joe Loopy, and they said they've got no stock. So it really does depend where you are, but we're not seeing that spring stock that we all expected to see. It's not coming in.
Now, are your agents looking at working over Christmas, New Year? Because some agents disappear for 4 or 6 weeks, but with this lack of stock, are they going to be trying to work harder?
I think there'll be some great opportunities for very productive agents over Christmas this year. Yes, I do.
Good.
Yeah.
So we'll hang around. We won't go on holiday. We'll try and buy some more stock.
You should hang around. Yes.
Rental price movements.
Again, we've had a reasonably good climb. They're up 1.44% since we started the count this time last week, as well, plus 2.24%. The mover and shaker again was Sydney at 0.55% over this time last week. But Hobart was the worst performing, not bad, but negative 0.56. But they had a massive climb of 2.81% about 3 weeks ago. So they're doing pretty well. So investors should be happy. Things aren't going backwards for them in key areas. In some areas they are.
Wonderful. And then finally, the vacancy rates.
This is where the problem is. Yeah, 1.26% for Sydney, which is outstanding. Melbourne came in at 2.55, but Perth, I'm sorry to say, we were hoping it would come down from the 8s, went up to 9s and back. 10.08% vacancy rate this last week. That's giving us an average of 4.636 for those 3 capital cities, but we really need some change to happen in Perth for that market to start correcting.
All right, sounds good. Very quickly, while we've got you on, what are your thoughts for 2017? Obviously, spring, normally you get a whole bunch of houses coming on the market, but how do you see next year?
We're hoping it's been as positive as it has been for us over the last 6 months. We actually had quite a busy Christmas last year in terms of home loans, so we're hoping that we'll see that again this year. But we're very optimistic and reasonably bullish about our targets for next year.
No, sounds good.
Yeah,
it's always nice to have a bank that's confident.
I know.
It gives you confidence as an investor and a business person.
I think your bank isn't run by the credit department, is it? So it's going to be a lot more flexible. And they're the sort of banks we need, ones that aren't run by credit departments.
And in terms of your thoughts for 2017?
Yeah, I think steady. Again, I still think there'll be pockets where it'll still go a little crazy because of lack of stock. But as those apartments start to kick in, the ones that we've all been talking about, the 92,000 that are going to come on the market over a period of time, it's going to give us some stability. And I think in Australia, with low interest rates, we're going to have a nice, strong, steady marketplace for a few years to come.
Wonderful. Sounds good. Charles Tarbey from Century 21. Check Kelly from Bank. Good to see you guys.
Thank you.
And good to see you at home. I'll be back in a normal jacket next week. Until then, and obviously support Century 21 and Cancer if you can. I'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.